E-mini S&Ps end the week lower from last Friday's settle, but holding roughly where we opened up the month of May and remain above a key 2,800 level. At this point, going back to the February highs to the March lows, 2,800 represents roughly 50% of that move. So as long as we can stay north of that number, we hold on to some bullish momentum, some hope and optimism that the stock market's really been trading off of since those March lows were put in. At this point, we're going to refocus on the headline risks. We're going to continue to focus on economic risks and outlooks. But at this point, again, 2,800 remains a key level. We can continue to settle or see a sustained trade above that. We do hold on to some bullishness, and that's very important. If we look at the VIX index, where is that telling us our next move's coming from? Well, we did see the VIX index creep above 30 this week, but not something I would hang my hat on as any kind of indicative indication that we're going to see a big move in either direction. I think the fact that we're holding at that 2,800 level now for a couple of weeks on a settlement basis suggests that, yeah, we need to see a catalyst move higher or lower here, or some kind of news that's going to move the market. We just haven't seen that. Nothing is really priced in. Not even a Fed chair interview is going to get us to move off, as we found out, because Mr. Powell is scheduled to speak on Sunday night on 60 Minutes. He's also scheduled to speak in front of the Senate Banking Committee, as well as he's going to give some opening remarks on Thursday to a COVID-19 event. At this point right now, the Fed chair wants to stay out in front of where the economic guidance is coming from, where every forecasting is coming from. And I think he wants to continue to propel the message that the Fed is ready and willing to do whatever is necessary for better or worse. Likewise, we also get the FOMC minutes from the April meeting. Not really a huge event, given all that we've heard from not only the Fed chair, but also a number of his generals. And lastly, we'll continue to keep an eye on what's happening with trade with China. Any trade war talk has been very negative to the equity markets in the past, as we've seen. So obviously, we want to maintain a close eye on that. Likewise, the economic recovery or hopes of an economic recovery will continue to be in the forefront. So as we head into the weekend, we remain above a key 2,800 level. Not a whole lot of data next week, but we do get some Fed speakers, and obviously we'll keep an eye on those minutes and the headlines.